Welcome back to another episode of Profitless on Purpose, the nonprofit accounting podcast, and not just from one accountant's perspective. I'm AJ, one of your hosts, and with me, as always, is Mark Hallerty.
Hey, everyone.
Got a great show for you. Got a couple articles. Got an article that do they still need our money? Talking about philanthropy and whether or not money still needs to go to an organization that's well, organized and running at a surplus. Do they still need your money? Might be the wrong question to ask. We'll talk about what they mean by that and dig into the kind of metrics behind how a philanthropy organization or a granting organization thinks about how they're going to give money and kind of the new twist on how they're thinking about that. And then we're going to get into a discussion about NFTs, everybody's new favorite in vogue kind of crypto transaction for artists and alike, what it means for philanthropy, and is it a new way that you can give back if you're an NFT artist? And if you're a nonprofit, do you want to accept these things? Well, we'll talk about the pitfalls and kind of what we think about that space in this episode. And then our last article is called Reopening Federal Pell Grants for Incarcerated People Means Higher Ed and Funders Can Do More. Well, there's a new wave of funding that has come through. Pell Grants are going to be made available again in 2023 for incarcerated folks. Is that a good thing? What does that mean for recidivism rates? I'll get it right one of these days saying that word. But and then also we give a kind of our feeling and our experience in this area and how funding goes for people that are incarcerated and your nonprofit. And then our topic of the week, or our question of the week, is advice on running and marketing a raffle or auction for your nonprofit, and how galas and what type of kind of accounting consequences are behind running a raffle or an auction, how you account for it, what are the pitfalls of them, our kind of advice for anybody that's wanting to enter in an auction or raffle setting, and what you need to know. We'll go through it all in this episode. But Mark, you have our first article. Why don't you go ahead and take it away?
Hey, thanks, AJ. Yeah, the first article today comes from the Stanford Social Innovation Review. And these authors tend to have really insightful articles, often related to nonprofit world. And in this one, the article is called "Do They Still Need Our Money?" And basically, the premise of this article is that there's sort of these big wave of high money donors. He cites Mackenzie Scott, which is Jeff Bezos's former wife, spending billions in these waves of grants to organizations. And then there's these other huge conglomerate funders that are spending in the tens of millions on specific charities. And he's saying, do nonprofits even still need the little guy's money or smaller foundation money when they're seeing this kind of big bets being made in social welfare organizations? And so this author turns it kind of on its head and says, do they still need our money? Well, the answer is, or the right question is, can they still create a lot of impact if I donate money, right? Because just because they've received a gigantic tranche of money from someone else doesn't necessarily mean that they can fulfill all their goals or what they want to do with that money. So he lays out an argument here about how the primary thing you should be looking at when you're donating to a nonprofit is whether they can make impact, your donation can make an impact. And the goal should be, he says, maximum impact for whatever the mission is. So you want to find and fund organizations best able to create change, the ones that are best at turning your money into impact. So need-based investments, I need this money for this, doesn't work any better in philanthropy than it does with a for-profit business. It's more about what can you do. In a for-profit, you're looking at what is my return on investment, but for a nonprofit, it's kind of like, what is my impact going to be? So, he kind of lays out this, and this author comes from a group of funders. So he is somebody who's looking at these proposals and looking at different things that are seeking his money, and he is trying to make these determinations. So his metric that he uses are, is there some research and development behind whatever their programs they're going towards? is their replication, have they proven that they can do this work? Is it available to be done again? Is scaling it going to make this more impactful to the community? And is the growth of the impact going to help if you scale the projects? So, and then he kind of lays out his different metrics, his rubric of what companies he funds. If they're in early stage in development, but they have some of their R&D done, and they know where they're going and they know what they can do, that might be more of a gamble than if you're like a late stage organization that has a strong track record and has an ambitious and smart, credible strategy. Then you can still get a jackpot off of them if you think that their initiatives are going to bear fruit. So I thought this was a really interesting way to look at it. And it's kind of a peek into the mind of the investor. Before I turn it over to AJ, I do want to say one of the main problems I had with this article was that the author is really treating nonprofits like businesses, right? And especially the scalability question, where he is effectively saying your nonprofit has to grow. And in the US, we're so used to that mentality in the stock market, right? You only reward companies with a higher share if you see future growth and you see growing and scaling and ramping up. But some nonprofits are fine staying at a certain size. They definitely need revenue and grants coming in to maintain that size, but they're not looking to just grow and expand. This is, nonprofit work is not necessarily capitalism, and scaling and growing and growing and growing isn't always the end goal. So that's something that kind of tweaked me a little bit when I was reading this. But I'm curious, AJ, what you thought as we noodle over this kind of high level thinking that this Stanford review does on nonprofits.
Well, I thought actually I took kind of the opposite view. I was really glad that a funder like this was looking at the impact that their money is going to make and taking into consideration like how often in my experience, when you're setting up in our local area, there's like these go-to kind of grantors, we can name them, but they're pretty like old big money, essentially foundations that churn out grants. And if you're in the Portland area, you probably know the names, the Myers and everyone else around that in that area. And what I found, or at least from the outside looking in as like when I was in public accounting as an auditor, was that there was this relationship and kind of like, I don't want to call it a old boys club or good old boys club, but it was like, if you knew somebody and they had given you grants before, you were in line before everybody else essentially, and they get a ton of requests for these. And I think that's changing in a bit. The landscape has kind of opened up to, like the grants that were in vogue 10 years ago have shifted to grants that are in vogue now. Like if you're addressing like diversity, equity, inclusion in your programs, if you're addressing homelessness and, kind of mental health and those kind of issues, I think have been much more like in vogue. So I'd say there's one thing that he doesn't mention is kind of these trends that happen in philanthropy or in grant making, where there's a new trend. Like you didn't see a lot of money going for diversity, equity, and inclusion training 10, 15 years ago. Now, if your program doesn't have an element of diversity, equity, and inclusion, it's probably close to being off the table unless it's a super stellar kind of project. So I would say you see a lot of trends. And I think looking at how you're going to give that money in respects to what he's looking at and how you divvy that money up, almost like an investment fund where sure, we'll put some money in some, more riskier, but like better return, like it's risky, but it could pay off, and then you plug some money in the middle of these steady Eddie kind of like, they have a proven track record of doing this. They want to maybe expand by 100,000 people. They've shown they can do it before. Let's put our money there. And then you have those late stage ones where they've proven it over and over and over again, totally scalable. All they need to do is more money to replicate what they've already done. And so I think having those kind of like guide rails and how and looking at it from a foundation or a large philanthropy pool of how to distribute that money and make good decisions, I think is vital. But it really kind of like makes it seem like a rubrics or like a flow chart, right? Like there's no there, that you're picking an organization based on what you think the best project is, and maybe you have 20 applicants, right? So then you go through this rubrics of, are they a late stage, early stage, are they doing R&D? Are they trying to figure out how to make this work, or have they already shown how it works? What are their, I think that's good, but it kind of leaves out for somebody that's like emerging and coming up. Now, granted, I think if you're a small nonprofit that's in that first part stage where you're still trying to figure out how you're going to deliver these programs, what the impact is, and whether or not you can scale it up, you probably shouldn't be going after these large, kind of conglomerate philanthropy pools. You can probably do better, especially on like a state or level or a smaller foundation level that have smaller micro grants that can go out to try and scale these things up. But it doesn't hurt to try, and if you, and so I think this type of thinking might leave out a portion of those well-intentioned and good nonprofits that just need a leg up. So I think it's interesting to kind of see the other side and the inner workings of how a large philanthropy group would do this, or think about how to give out money. The other part of the article that I really liked was, hey, we're in philanthropy, don't forego donations. And also too, organizations can use unrestricted money. Even if an organization is fully funded on their programs, I guarantee you they need money for organizational or unrestricted money to cover admin and fundraising costs. So to make that churn even better. So I really liked the article, and I thought it was interesting to hear, kind of the inner workings of how this guy and his organization thinks about distributing grant money and philanthropic money. So,
yeah, and I don't disagree with you. I think it's a well-written article, and I think it is interesting to see how somebody thinks about it in this way. And your last point, I was actually just going to bring that up. The unrestricted multi-year and minimum hassle money he brings up in there. It's like, that's the goose that laid the golden egg, right? If you could find funders that are going to give you money, not make you reapply for it every year, not make you prove that you need it for a specific program. If you get to a level where they trust the work you're doing and can see it, that's great. I think my only issue was that this is really coming from somebody who's thinking about nonprofits like a venture capitalist would. And maybe like you even mentioned, there's some nuance there. There's some different programs, different initiatives you might be going for rather than just the big bottom line. So anyway, but it was definitely interesting.
Yeah. Well, my question to you, Mark, is what would be the alternative, I guess, like in thinking about it? I understand, like, I guess, if you were to tweak the system, what would you think of as being an alternative that would maybe work better in your mind?
Absolutely. Give me 100 million and I'll figure that out. I'll find the exact right way to dole out that cash. No, I think I do like the aspect of finding organizations that can have the greatest impact with their money. That's great. I just, I guess the growth curve is what tweaks me a little bit, because nonprofits aren't capitalistic. So anyway, that's it. But on to the second article. That's you, AJ.
Yeah. So this one's kind of interesting, and I'm sure Mark and I will have some editorial commentary on this one. But this comes our way of Cointelegraph, which, if you hear the premise of this article, might give you a slant on what their bias may lie. But it's called NFT Philanthropy Demonstrates New Ways of Giving Back. So for our listeners that are uninitiated, NFTs are non-fungible tokens. It's this new thing that's come out that's linked to blockchain and crypto transactions. And we've talked about crypto before on the podcast. So this kind of mimics what a cryptocurrency is, but it's related around digital goods and digital artwork, essentially. And you own a digital asset, I guess, is, if you buy one of these things. And they've been all the rage. And so what they're talking about is NFTs being donated to nonprofits and how this is a growth place for nonprofits to live in. And so Some may be wondering if how NFTs are applying these new streams of income. And industry experts believe that NFT philanthropy is coming as a major trend as sales of non-fungible tokens increase. So it talks about like if an artist sells their NFT and they want to donate some of that money through the blockchain to a nonprofit, but also donating the NFTs themselves. And it goes into a couple examples of that. There was an NFT gallery where people could purchase artwork with their artwork NFTs with their tokens, and the proceeds from each one of these sales are donated to participating charities. And 25% of those sales went to the State of National Women Institute, for instance, in March of this year. That's going to happen. And there's some really beautiful artwork that they displayed here that was created by an 8-year-old of all things. I can't believe an 8-year-old created this, but they did. And we'll have a link to the article if you want to take a look at it. But essentially what they're talking about is explaining how the proceeds work, how a nonprofit should treat it. Of course, they kind of pump this trading platform that they're involved with to use it in your nonprofit. And they go on to talk about other nonprofit or other blockchain trading, Bitcoin and NFT or crypto and NFT platforms that you can use, and partnerships that have been created for it. So they also have NFTs that go toward mental health and anxiety work. They have essentially, so they talk about NFTs are the new form of digital identity that can help reach youth. The backstory, though, is that NFTs can also be very profitable. NFTs can be viewed as a way to eventually provide new types of equity finance, working as blockchain through equity through NFTs. This is a huge area that our company believes will accelerate fast. Many projects are using NFTs to engage with an audience while funding their own work and charitable initiatives. So they talked about it. They kind of gloss over the number of scams that have plagued the NFT space. They kind of brush that away and continue to talk about it's important for both donors and organizations to carefully consider each nonprofit accepting an NFT. They put the onus on the nonprofit accepting it, not maybe the person perpetrating the NFT in the first place, but I digress. So they talk about, the presence of an entirely new audience that you can reach through these NFTs, and how nonprofits should look to NFTs either as being donated or creating their own and distributing them for excess cash. So I'm sure Mark has a lot to say about this. I as do myself, but I will unleash him first on this article to give his opinion on whether NFTs are the future of nonprofit philanthropy.
Yeah. Okay. NFTs. Oh, come on. All right. So, I don't want to be the old man in the room and be like, get off my lawn, stupid NFTs. But NFTs are, so we're in the wild west of NFTs, and people don't exactly know how it's going to all shake out later. So we're still in a new position when it comes to NFTs. They're still relatively new in the past few years, but they're problematic. They're heavily problematic. First of all, the author of this article must be in some way connected to this organization that they keep referring to for the sales of these NFTs, and where you can use, which platform you can use to buy and sell these. I think the first point I want to make is buyer beware, right? If you are a nonprofit and you're receiving an NFT, I'm going to say do the same tactic we have recommended with regard to stock purchases. If you get that NFT in as a donation, turn around and sell it and get its value in US currency or whatever currency of the country you're in. Because NFTs are based on, right now, usually Ethereum, but on other forms of cryptocurrency that, you could get a $30 million donation that could become 5 million the next week. The currency, as we discussed last week, is a bit too volatile. But the article fails to mention a lot of the problems of NFTs. And this could go very long if we go into a lesson of NFTs. But one of the problems that just is so frustrating is that anybody can set up an NFT for any reason, for any desire. They don't even have to own the copyright of what they're NFTing. So I can I actually listened to a content creator who is an artist, and this artist keeps getting offered to buy NFTs of his own work. And he's like, frankly, this is bullshit. If I was going to get into the NFT world, I should be able to use my own copyright and my own art to create NFTs. Now, because the blockchain and, they're agnostic and they don't care who set up the NFT. Now somebody else owns his work and he has to go to court to fight to get that back. I mean, it seems completely backward. This is the Wild West again. So you don't even have to have ownership of anything in order to be selling it, which makes NFTs, even more than cryptocurrency, have this air of ill-gotten gains. I read this whole article on how money laundering happens through NFTs, where two people in an organization, one buys something super cheap, creates an NFT, and then sells it to somebody else in the organization super expensive. That money is now in Ethereum, and their ill-gotten US currency, which has now been laundered into an EFT, because NFTs have no inherent value, right? If there's an image that has been NFT'd, I can create as many copies as I want on my computer by right-clicking and doing save as. Somebody might be able to say, well, I own that and I can use it commercially, but these images are already all out there and all usable. So it just feels like it's this digital nothingness that people are trading on a certificate of authenticity. It's like, I'm going to buy the deed to a house and pay as much as I would for the house, but all I'm getting is the deed. And if, and these are all carried in the blockchain, if anything goes wrong with any of these servers that are carrying your NFT, that could just disappear. You don't ever have any true ownership of anything. You just have a digital coin saying you have it, and you're relying on these servers to be up forever. And we never have any technological issues, right? So couldn't see any problems happening in the future. And as we discussed on the cryptocurrency, there are organizations that are looking to break the blockchain and think within 5 to 10 years, some quantum computing will be able to get right in there and switch it up. So sorry, I'm going to get off the rant bus, but I could go on and on and on, but buyer beware. AJ.
Well, yeah, and I think the other thing that you didn't mention that's, these pump and dump kind of schemes that are going on in crypto and in NFT world, where you mentioned like two friends, right? If I created an NFT and I lend Mark $10,000, I put all my life savings into Mark's hands, he buys my NFT, and then I'm like, oh my gosh, on Twitter, oh my gosh, my NFT just sold for $10,000. There's only 10 left, like, I can't believe this. Somebody saw the value in my artwork. Well, now guess what? The market is showing that my NFT is worth $10,000, even though I bought it myself with a different wallet or whatever. So it is buyer beware. I think there is a lot of like essentially theft going on, where somebody is taking somebody else's work and digitizing it and putting it into a limited edition or whatever. I think it's good for artists that truly like go into it with their own personal artwork and are it's like selling prints, I guess, back in the day when you could buy like a print of a famous painting. But again,
not like Purple Rain. Okay, no. Different kind of print.
Print, PRINT. Not the symbol. But yeah, so I think with the good and the bad, but right now I'm seeing more bad with NFTs, and just like Mark mentioned, it is the Wild West out there. So if you're a nonprofit and you're gifted one of these things, I think we go back to kind of giving the same advice that we gave with crypto, right? You want to be able to accept them if people are wanting to donate to them. So you need some kind of platform to be able to accept them. And then once you do accept them, you need to liquidate them as quickly as possible. At least that's the advice I would give. But first and foremost, I would set a policy in place to understand what happens if you receive one of these things. And you don't need to be an NFT expert to craft a policy. It's essentially the same policy you would have around stock or crypto or NFTs. They should all mirror each other, I think, in regards to your risk appetite of leaving something in there, and the complicated accounting structure that happens if you do leave something in a volatile market like that. And especially that the IRS and the FASB and all the codifications around the accounting of this stuff hasn't been shook out yet. The market has moved faster than the regulators, no surprise, but you're really in like a gray area of what gains are and how to track this stuff. There's been, best practices released, and we can go through that in a different episode if we would like. But essentially, you're treating it like a capital gains and a mark-to-market adjustment on your books. So, which is a headache. I mean, let's be honest, unrealized.
Yeah, and AJ, do we know how a nonprofit would send out a donor letter? Would they just put the donor letter in Ethereum, or what?
Or to wallet number 53972AB43. Yeah, like it. So again, we've talked about this in the past when we talked about crypto, accepting like crypto coin, capturing somebody's donor information in this stuff, especially if there's somebody that's trying to shed excess cash. It's like, are they really going to put their name, address, and social security number? Are they going to give a nonprofit that kind of information to then be reported? It's doubtful at best. You can try, but it doesn't stop anybody from putting, some fake name in there. But again, I think, this is a new emerging area. I think, especially if you're in the art world or, in that kind of museum setting, you need to then make a decision on whether or not you're going to keep a digital asset curation, and how you display this stuff if you're accepting.
Yeah, AJ, I want to mention one more thing that I forgot when I was looking over my notes, but you also have to determine if this is within your mission, right? We talk about mission all the time. And if you are an environmentally based nonprofit, cryptocurrency and NFTs use up a tremendous amount of energy. The blockchain is sucking down, more energy per day than, whatever. I mean, you can go out there and find it. But if you're an environmentally based organization that's looking to save the planet and you're accepting NFTs or accepting crypto coin, you might be at odds and you might be, creating some issues for your donors. Sorry, just wanted to add that.
No, it's a great point. It's one that I hadn't thought about, the environmental impact of running these computers and graphics cards and everything else that goes along with creating the blockchain is devastating. You're talking about, and not just from the energy use, but from the minerals and everything that goes to put together the computers that do this stuff. So just be aware. I think, if you're a for-profit business, you should think about this stuff, but you don't really need to think about it to the extent a nonprofit would. You need to kind of step back and look and maybe include that in your policy that we recommend that you draft, like what types of NFTs and what types of crypto are you going to accept, how you're going to deal with it after you accept those donations. And then, the long-term ramifications of either holding them or not holding them, and understand what that is, and the accounting ramifications of all of that. So I think, stay tuned for more, because I'm sure this is not the last time we will hear about it, and I think this is really an interesting and emerging kind of sector that's happening, not just in the nonprofit world, but in our world in general. So, I don't want to go any further because I can start ranting about video game NFTs and how this is all just a scam, and so I think we'll leave it there. Mark, do you have our next article for us?
You bet. This one comes from the Johnson Center of Philanthropy, and it's called "Reopening Federal Pell Grants for Incarcerated People Means Higher Ed and Funders Can Do More." And this is kind of one of those feel-good stories, at least in my mind, about how the world has shifted one direction and then has started to shift back. So just some statistics right now in the US, there's roughly 1.8 million people incarcerated. And way back when, there was a lot of education that was offered to some of these inmates in order for them to be able to pursue higher education while they were incarcerated. Then sometime, I think back in 2004, I might have that date wrong, Congress decided, nope, no more. We're not authorizing any of these funds to go to help incarcerated people. So it was just being funded by grants, and the number of people who were being served by this went down dramatically. So in the past few years, with kind of a shifting and changing focus, and some would say social justice, but some would just say a kind of a reckoning and a truth saying of what's been going on in the prison, the prison monetary complex. People have started to question the treatment of prisoners and what we're really doing for them. And if we're just churning, holding them to collect dollars and just churning them out to have them come back into prison. And one of the clear metrics that has come forth is that the recidivism rate for prisoners who take this higher education track is much lower than people who just are in there living the day to day and don't have any incentive to move forward. So, in the past few years, this has changed. And under President Obama, there was some new legislation passed. And so all of a sudden, some of these funding collaboratives have gotten together and started to look at initiatives like community bail funds for those who can't afford even any form of cash bail, so that they can actually have their day in court and not just be stuck forever in a debtor's prison, not having their fair day because they just don't even have enough to post bail. But then there are under the Obama administration, the Pell grants is going to start in 2023 to open up to those within the prison system. So as a result, we're going to go from something like helping 34,000 students currently to having access to over 463,000 incarcerated people having access to these funds in the near future. And, the Pell grants, anybody who's gone to higher ed, you filling out your FAFSA and doing all these other things, Pell grants is your federal way to get some decent money to go to college. Some of it gets paid back and some of it doesn't have to be based on needs. And I think this is kind of a hopeful sign that we're looking at incarceration as maybe more rehabilitation than just punishment, right? And moving in that direction when we welcome people back into society after they have served time, they have actually a goal and some focus in their life. So I'm curious what you thought of this one, AJ.
Yeah, I thought it was really interesting development. And I think it's not something that's just this was linked to us through like the 11 trends or whatever in 2022 for nonprofits. But I think this is something that's kind of been on the rise in the past, 5 years or so that I've seen. I work with an organization that deals in mental health and pure, kind of peer-to-peer mental health services. And they received large grants to do something very similar to this to reduce recidivism rates for people that have been incarcerated once or multiple times. And so I know Department of Labor, Department of Justice, and a couple other organizations have really targeted people that have been incarcerated to be able to access education and, mental health and kind of turn their life around, either from addiction, mental health, or from being uneducated and not seeing a way out of the situation that they're at that led them to be imprisoned in the first place. And so I think it's a good move. I think the more you give somebody a light at the end of the tunnel, I think that's great. I think it gives them something to work for. And I think there's been numerous studies that the more education you have, the less likely you are to end up in the in a criminal justice system or in prison. So I think the data's there. I think I think there needs to be in all facets of our society a way for somebody to come out the other side of something that has happened, and there needs to be some kind of redemption arc or personal growth arc that can happen. And I think funding for this is really good for our nonprofit partners. I think if this is kind of the route they're going, you're looking, Pell grants are specific to educational, organizations that fall under the federal education system stuff. So this kind of funding would be only available to if you're an accredited educational organization. So you have to be accredited to get these Pell grant monies. It has its own kind of set of regulations and accounting that needs to happen for it. But be aware that this is not just related to Pell grants. It's also related to funding that happens through traditional grant avenues that I've seen. So it's not just in, the higher ed or educational accreditation group, like schools and universities and et cetera. It can also extend if your organization offers mental health services or even like general education stuff that happens not through a Pell grant, but through a grant either from a governmental agency. And I've even seen private foundations jump into this stuff. So I think it's an expanding area. So I think it's
point of clarification. If I'm in prison and I want to take some courses from Trump University, are you saying I can't do that?
Yeah, no, I think you can. I just don't think Trump U would be eligible for Pell grant money to come from it. But
that's a close one.
You might be able to get your real estate license from there, but who knows? But so I think if you want to become a Reiki healer or something like that in prison, you probably wouldn't qualify for a Pell grant. But if you want to go on and get basic job training or a higher educational, degree, even a GED or a high school equivalency test, I think those are all available. And I think it's something that I think as a whole, we should look more into. I think the money's there. And, I'm seeing a change, at least in the group of nonprofits that I work with, that this is more of a point of emphasis. And so I'm interested to see what comes from this.
Agreed. Well, I think, AJ, you've got our question of the week.
Yeah, this is an interesting one. So we have a question from a small nonprofit, and they're thinking about doing their first gala, and they wanted kind of advice on how to run a raffle or an auction, and if they should purchase the items for the raffle themselves through the nonprofit, if they go out and look for donations, what are the accounting ramifications of that? How should they track this, and how should they go about, essentially setting up? We all know if you are naive to the nonprofit world, everybody thinks of raffles and auctions and galas as being, kind of a neat fundraising event. But in actuality and in practice, they can be much different than I think people sometimes think about them. So this person is asking for advice on how to run their first auction or raffle as a nonprofit. Mark, I'm sure you probably have some advice, or at least, some commentary on this. I'll let you take a swing at it first here.
Sure. I would say to our esteemed listener, you got two things going on here, right? I want to separate them in terms of accounting. You've got auctions and you've got raffles. They often get lumped in together because they are kind of similar in tone, but they're actually have different treatment, right? So sure, you can buy items for your auction, and then, whatever you sell them at auction, the excess goes into your funds. But, if you take in auction donations, which is probably the more common way to do it, then you're going to be sending a letter to the donor and having them tell you what the base value of that donated gift is. So let's say I'm going to give away a weekend at my house on the coast. And normally, if I put that on VRBO, it's going to get $100 a night. And so it's a $200 gift. And then when it goes up for auction, the person who purchases that, let's say they purchase it for $250, they're only going to get a charitable donation ticket for $50 because the cost gets deducted from whatever the base value of that auction item is. And often auction items can go for less than what their base value is, and then no letter goes out, right? And this in-kind donation you get from the donor, they're going to get a letter saying thank you for your in-kind donation. But usually what I've seen is there's no dollar amount on there, right? The donor can determine their own in-kind value, because you don't want your nonprofit to be in the market to be, an appraiser of all these different things. And somebody says, oh yeah, those nights at the coast are worth $500 a piece, so send me a letter for $1,000. It's better to just let them determine it themselves. And if the IRS sees that that's probably not right, the two of them can work it out. The other thing, let's just move to raffles. Raffles can be considered a form of gambling, right? Because you are purchasing into something with the hopes of winning. And the rules, I had to actually look this one up because it's interesting, but the rules are, if you make more than 50 times what the value of your ticket is, then you have to supply the winner of that with a W-2G, which is a gambling W-2, right? So let's say I'm selling raffle tickets for $1 and it's $1,000 prize. So that would be a 1,000 times what the value of the raffle ticket is. So when I'm doling out that $1,000 gift, I have to get the information on the donor because they're going to be getting a W-2G. Further, to complicate things, you might have to do some tax withholding on that person as well, because it is a W-2 and you're expected as a W-2 giver to make sure that some withholding tax is taken out of that. Oftentimes, organizations will gross up the prize and pay the tax withholding on behalf of that person, but they're still going to be responsible for paying tax on any winnings that are more than 50 times what the cost of the raffle ticket is. It's kind of that Price is Right conundrum, right? Where you see somebody win a new car and then they don't even take the car because they realize the cost that they would have to pay in taxes to even take that car home is not worth it, because of course everything is at sticker price for the Price is Right, if you will. We veered a little, but just beware if you're taking on a raffle, if you've got de minimis amounts of prizes, right? You're putting in $1 for $25. You have a whole bunch of items that you're raffling off that are worth $25 a piece, and everybody can put in a $1 raffle. Then you're fine, because this is not considered 50 times. And, you're not going to necessarily give a donation receipt for these raffle tickets because, again, it is a gamble. It's like buying a lottery ticket. It's very difficult to write off a lottery ticket unless you're a professional gambler and you can prove as such. So I think I've rambled. AJ, I'm going to let you jump in.
Sure. I think it's important to kind of point out maybe like an overview of how you should account for this stuff. So you want to make sure that this is a fundraising event, and you want to make sure that your fundraising event costs are separated, not just for internal purposes, but it's also a way that you reported on the 990 return. So you want to make sure that your fundraising receipts that happen around fundraising events like this are tracked with the expenses. So what does that mean? You need to create a class or GL code that you can track these fundraising expenses under, like fundraising event expenses under. The other thing that you'll note is if you go through that process, that a lot of times these events often don't net as much money as people think they do. And you want to be aware of that when you're setting this up. The time, effort, to track this stuff, to go out and get donations for those raffle prizes or auction prizes, the meal that usually goes along with it, the guest list of setting that up and taking reservations and the money coming in and how you're going to process people paying, and all this other cost and effort that goes into it needs to be tracked, and not just for 990 purposes, but so that you can understand what the return on your time is, or return on the investment put forward to put on one of these things. So definitely, like Mark said, you want to track not just the donations that are coming in and the fair market value of those, of what somebody would receive for an auction item or a raffle item, but you also want to track the other, like we can call them soft cost or variable cost or whatever you want to call them, people's time that it takes. These charity raffles and charity events like galas take a lot of planning time from your organization. And I often find if you want to use it as a marketing tool, and an outreach and development tool, to thank donors, to thank people that are associated with it, or cultivate new donors to come in and woo them and show off what your organization does in a setting like this, and let them mingle with other donors. I think that, is a good way to look at it. But if you're looking at your annual gala as raising, tens of thousands or millions of dollars for your organization, you got to be a pretty big, player in the game to be able to drive that kind of donation and matching funds and all the other stuff that goes along with it. So,
AJ, I want to throw in, while you're talking about that, there's also an unintended consequence of running a raffle too. If your volunteers are running your raffle, you're pretty safe. But if you have employees running your raffle, all of a sudden you're in UBIT territory, because you have unrelated business income that you are, because you're most likely, your nonprofit has nothing to do with running a raffle. So if you're paying somebody time to run that raffle, all of a sudden you have unrelated business income. So I think the rule is it's got to be substantially all of that labor is coming from a volunteer. And that usually means 85% or more means volunteers are running the raffle. And if you find yourself assigning an employee to that, be ready to pay UBIT on it.
Yeah. I think the real, if we want to boil this down, I think understanding that, raffles, galas, auctions, they're not as straightforward as they sound. They're often like the first go-to of a very young nonprofit to want to, kind of generate goodwill, revenue, that kind of thing associated with your nonprofit. But I think understanding that, these can be murky waters. They can, constitute, kind of more extensive tracking in the accounting system and work behind the scenes to make these things happen. I think, take a long look at your organization and understand, if you're entering into one of these things, that you need advice from your tax preparer, your accountant, you know what I mean? All that kind of stuff. You want the development department involved in this. You want to be able that the reach and the reason you're having this thing put on is matching what you're seeing on the back end for revenue associated with it, and I think tracking all this stuff is cumbersome and it takes time, and to understand that kind of investment that you need on the front end is really important. So just a word of advice. And I think, tracking all this stuff, you can't go wrong in this case of being detail orientated about siloing those costs and understanding what your organization is actually paying for a gala or one of these charity or auction events that you want to have. So that's just my 2 cents on it.
Agreed. Well, I think we had some great and insightful topics again this week. And I want to thank everybody out there for joining us for another episode of Profitless on Purpose. We certainly appreciate your input. We love hearing the questions. Of course, you can always send those to our Twitter @ProfitlessPod or comment on the YouTube link. We appreciate you rating our podcast wherever you're listening to this, be it Apple Podcasts or even Spotify. But on behalf of AJ and myself, thanks again for joining us, and we'll see you next time on another episode.
Thanks, everybody.